Well, we have seen some nice movements in interest rates, y'all. It's nice to be able to report that we are starting what may be a trend line lower. And we're going to talk about what's moving interest rates on this video today. So let's dive right into it for Thursday, the 20th of March. Hope everyone is doing well. Beautiful weather outside. Would love to just bottle this up and keep it all year round. But let's dive into the numbers. Mortgage News Daily has a 30-year fixed rate conforming loan today, 6.71%. Y'all, that is the low for the last 30 days. That is a very nice reprieve from the 6.96 that we saw 30 days ago today. That's almost a third of a point improvement in rates, y'all. So that is a very nice movement in rates. 6.78 is where we were a week ago. So we're down even from this time last week, owing to the Federal Reserve and the comments that they made post meeting yesterday. So I think everyone is aware, if you're tracking interest rates at all, that the Fed did not cut rates yesterday. They were not expected to. But they did say something in their minutes following the meeting that was very important for the market. They mentioned that they are going to stop their balance sheet runoff, or at least lower it from $25 billion a month to $5 billion a month. So, y'all, as these fixed income securities mature, they're falling off of the Fed's balance sheet at $25 billion a month is what they've been allowing so far. But starting in April, just this next month, 2 weeks from today, they're going to reduce that to $5 billion a month in runoff. Now, the way they do that, y'all, is they're going to be buying fixed income securities to the tune of $20 billion a month. That additional demand pushes the price of bonds higher. And remember that the yield on those bonds, our interest rates move inverse to the price. So that increase in demand of $20 billion a month for fixed income securities is right now working its way through the fixed income markets and giving us this rate reprieve that we're seeing today. So it's good news. That's helping us. The Dow likes the news as well. It's up 1,100 points so far this week. Folks are starting to understand the negotiating tactics being employed with these tariffs. When you listen to the Fed speak as well, they mention that any price increases associated with the tariffs are likely to be short term, and they use that term transitionary to apply to it. That's because inflation is caused primarily by one thing, y'all, and that is more dollars in the economy chasing the same number of goods. Tariffs don't add dollars to the economy. In fact, they do a bit of the opposite, and this isn't being discussed much with regard to the tariff conversation. They also strengthen the dollar, which makes us buy more in relationship to foreign currencies. So there are some deflationary aspects to a stronger dollar that are being bolstered and offsetting some of the additional cost increases that individual industries might be experiencing as a result of tariffs. So it's not an all or nothing game with regard to tariffs raising prices. They also strengthen the dollar, which helps us. Now, what does that mean as far as the CME FedWatch tool? There is now a 73% chance of a Fed cut at the June 18th meeting. There's only a 16% chance of a cut at the May meeting after we have parsed the Fed's language and looked at Fed futures and how they're trading. So that is kind of in a nutshell where we are, y'all. We are starting a nice trend downward in interest rates. Let's hope it continues. I'm going to keep an eye on it for you. What does it mean for a $400,000 mortgage? Just the movement what we've seen in the last 30 days. A lot of folks ask me this. 6.96 30 days ago versus 6.71% in the national average today. That's a $67 a month difference, y'all. That's $10,000 in buying power. So the same payment that you would have had on $400,000 30 days ago it borrows you $410,000 today. So these are not insignificant moves. When we move a third of a point, you've seen nice results in affordability. Let's hope that continues, y'all. As always, I'm going to keep an eye on it for you, and we will talk again next week.